everybody, it's Roy from 4-Star Homes, and guys, today I'm going to be making a video, a very difficult video, a subject that is kind of difficult for me to talk about, and that's whether or not you have been priced out of paradise. Ever since Hurricane Ian reared its ugly head late last fall, let me tell you, things here in Florida have really changed drastically as far as housing is concerned. And when I say changed, I don't mean for the better, it's actually been for the worse. So during the first part of this video, I'm going to go ahead and touch upon what's happening here in the housing market. And then I'm going to talk about manufactured home values, prices, lot rents, and different things like that. However, you're probably going to want to stick around for the latter part of this video, because what I'm going to do is I'm going to put up some tips and suggestions for you to determine whether or not retiring to Florida is still in your financial future. But before we go ahead and do that, I want to step back in time just a little bit. You know, back in June of 2022, I did a video, and at the end of that video, I put down my predictions of what I thought was going to happen with not just the housing market, but with manufactured homes in general. It's going to be kind of interesting to see how things transpired. So watch this clip before we begin. I don't have a crystal ball to predict the future, but I can make an assumption. But you know what happens when you assume something. Well, obviously, the federal government just raised the interest rates by about 0.75%. In my opinion, that is the first knife in the back of mortgages, because now interest rates on the mortgages have gone up. What's going to happen is I think there's going to be at least one or even two more knives in the back, okay, from the federal government raising the interest rates. And what that's going to do, it's going to keep people from purchasing homes, because mortgages are just going to be outrageous, okay? When that happens, we're going to go into a recession, and guess what happens when we're in a recession? Prices are going to start to drop. Typically, manufactured homes will follow the housing market, so when housing prices go up, manufactured homes will follow. And obviously, when the prices drop, manufactured homes will also drop. But I don't think the demand for people moving to Florida is going to diminish. What it's going to do is it's going to have more people look at the possibility of a more affordable way of moving to Florida. That's going to be manufactured homes. So really, I don't foresee in the very near future the price of mobile homes dropping. They might even still continue to increase a little bit, but you know, that's yet to be seen. Stop back in 6 months and we'll see if I'm right or not. I think a lot of what I predicted did transpire, but obviously there's been some variables that came into play. For one thing, when I made that video, it was pre-Hurricane Ian. And obviously since Ian, a lot of things here have changed. And I think before we could start looking at manufactured homes, we need to take a quick look to see what's happening in the housing market in general. So right off the top, I was right about one thing, and that was the increase in interest rates on mortgages. I do believe the feds did raise the rates at least twice, possibly 3 times since I made that video a year ago. One thing that wasn't happening at the time I made that video last year was the insurance crisis that we're facing right now. Now, if you're not sure what I mean by homeowner insurance crisis, watch this.
In the aftermath of destructive hurricanes, the cost of home insurance in Florida has increased 100% since 2020.
Allstate subsidiary Castle Key insured his home as is for $1,800. It jumped to $2,500 in 2022, and his most recent renewal
to almost $5,000. It was an 87% rate increase.
So last year, all the experts predicted price decreases here in the state of Florida, and you would think with what's happening with the insurance right now that prices here in Florida would be dropping like a rock. And the truth is, they're not. They're actually starting to go back up. Check this out, guys. Pay attention to this area right here. So according to Redfin, and this is their May statistics here, the average price of a single-family home here in Florida is $434,000. Now, that is a slight decrease year over year of about 2%, but take a look. Since the beginning of the year, the prices of the houses have started to go back up again. Okay, so let's take a look at some alternative housing options. For example, let's take a look at townhouses. They're actually up about 2%. Average price of a townhouse is $356,000. Again, since the beginning of the year, prices on those have started to go back up. And then on condominiums, okay, yeah, the prices are down about 2%, again, year over year. $318,000 is the price of a condo. But again, since December, take a look at this, you know, prices have been gradually increasing again. So what's going on here? Why aren't the prices falling like people have predicted? What's actually fueling these increases, or the prices just staying the same, as a matter of fact? For one thing, those big investment firms, they're still buying up a lot of property here in Florida, and they're buying them in bulk. And they're actually looking for homes in those cheaper price ranges between $200,000 and $350,000, not for the purpose of reselling the homes, but to rent them out, which seems to be a growing trend here in the state. Like I said in that 2022 video, we had a migration problem at the time, and we still do, okay? I mean, it hasn't really relaxed at all. Take a look at Florida. Look at that. It's colored in red because Florida is the only state in the country that's getting more people moving into it than that's actually leaving. And look at where the people are coming from: California and New York. So why would they be coming from these areas? Well, actually, the cost of living in New York City or certain cities in California is much, much more expensive than here in Florida. So when these people are moving here, they're actually saving money. So when you stop and look at the top 10 areas that people are moving to, 5 of those areas are made up of cities here in Florida. Let me tell you something, guys. It is just absolutely crazy down here as far as real estate is concerned. I mean, it's a double squeeze, one end or the other end. Let me explain to you what I mean. A lot of homeowners who currently own homes here in the state of Florida are really feeling the pinch of what's going on. I mean, everything has just risen to the point where many people just can't afford the homes that they're living in, and they have to put them up for sale.
We are leaving Florida. Cost of living in Florida has risen drastically since we moved here in 2020. And
now, on the other end of that spectrum are people, especially families, who are looking here to move to Florida and they want to purchase a house. Now what's happening is they're coming across all of these obstacles where, you know, their dreams just aren't materializing like the way they had hoped. So let me show you an example.
When Brittany Huey and her husband sold their Florida home 2 years ago and put all their stuff in storage, they thought it would be temporary.
We wanted to sell, take advantage of the equity that had grown in the house over the time that we had owned it.
They hope to move out in 2 months.
Our ultimate goal was to find that upgraded home that allowed us to grow our family, and the increases in rates and having to account for homeowners insurance and so forth, we've really had to scale that back.
So you baby boomers out there, you probably remember not long ago, maybe 10 years ago, okay, where it used to be like the ultimate dream to retire to Florida because everything down here was so cheap, it was easy retirement, you come down here on a smaller income. Let me tell you something, it's not like that anymore, okay, and it's going to get worse before it gets any better. There are 2 other issues plaguing Florida that you should know about, and the first one is automobile insurance. I mean, it was bad enough that Florida was previously ranked number 8 as far as costs of auto insurance, but it seems clear now that they're looking to take over the number 1 spot in that area too, as most Floridians have seen a big increase in their rates over the past 12 months. It also appears that inflation has got its grimy hands all over the food costs here in Florida, as now the cost of food for this state is definitely above the national average. All right, everybody, let's get back on the topic of manufactured homes. The only reason I got so long-winded on the real estate market here in Florida is because I thought it important that you realize exactly what homeowners here in the state are going through just in order to make ends meet or to keep their home. You know, they got to pinch every single penny. So, you know, the big question is going to be, is manufactured homes still going to be a more affordable alternative, okay, to what these people are going through? Well, let's just start by this, okay? That video that I did in 2022, last June, I predicted that manufactured homes would probably hold their prices or even increase a little bit. So let's see how close I came to that prediction. Since I made that old video in June of 2022, that was actually the end of the second quarter of the year. So I thought it'd be kind of interesting if we took that second quarter and compared it to this year's second quarter of 2023. So go ahead and take a look at that. You could see the home prices, and you can see it's pretty much split. We have 3 regions showing price increases. We have 3 regions showing price decreases. We have Sebring, not much movement at all. But obviously, as we expected, we did have lot rent increases throughout. So when you average all these numbers out, take a look at this. You can see that the home prices actually remained pretty stable between second quarter last year and second quarter of this year. All right, so I think it's important that we touch on lot rents just for a few moments. Just out of curiosity, what I did is I went back to 2019, which is the pre-pandemic era, and I pulled up the average lot rent for all the areas that 4-star homes covered. And back then in 2019, the average lot rent was $503. Today, it's $650. Now, that kind of represents a 29% increase in just a 3.5-year period, but a lot of that increase has actually happened in the past 12 months. So why is that? Well, number one, land values have increased, causing property taxes on the parks to go up. Number two, you saw in our examples the cost of homeowners insurance. Well, you know, park owners, they have to carry a master policy on the parks, and I'm sure that the premiums on those have gone up substantially too. And number three, and I think the most important thing that we've all faced in the past 12 months is inflation. I mean, everything has gone up, everything. Inflation has caused the total operations and the maintenance costs, for one of these parks to dramatically increase. Personally, I think that if inflation stays at the rate it is, we could still expect about another 8% increase in lot rents over the course of the next 12 months. So already I could hear the naysayers out there going, oh, well, lot rents are a ripoff, or park owners, they're just greedy, or lot rents, they're the equivalent to a mortgage payment, which they're not, at least here in Florida, they're not. All right, so guys, whatever objections that you have, whether you like it or not, whether you agree with it or not, doesn't make a difference. This is the cost to live in Florida. Again, whether you like it or not, this is how much it's going to cost you to live in Florida. And for some people, a lot rent is much, much more affordable than any type of mortgage. And those senior citizens out there who are on a smaller income, this may be the only way that they can get a foothold in the state of Florida and enjoy their retirement like they actually planned. So I'm just going to be totally upfront and truthful here for you naysayers. If for any reason you think these numbers are just too high or a total ripoff, then chances are Florida is not the place you want to move to, because you will be hard pressed to find any type of housing here in Florida for cheaper than the numbers I just quoted. All right, everybody, now it's time for me to give you some tips and suggestions to help you determine whether or not retiring to Florida is still in your future. All right, here we go. Tip number one, everybody, and you've heard me say this 1,000 times, whatever it is that you're buying, pay cash for it. And when you're shopping for a manufactured home, work within the amount of money that you have available. So if you only have $40,000, look for a home that's 40 grand or less. If you have $70,000, look for a home that's $70,000 or less. So the whole thing here is try to work with the money that you have available. Tip number two, determine how much lot rent you can afford by using the Rule of 30. So what's the Rule of 30? Well, very simply, just take 30% of your combined gross monthly income and find out what that figure is. That number will give you a pretty good idea of what you have to work with. Try to stay under that number if possible. The Rule of 30 is also a useful tool to both meet residency requirements for any park and ensure that you have extra money each month to enjoy everything Florida has to offer. Tip number three, if you have a bank account that looks more like this, then consider purchasing a home in a resident-owned community. This is where you own both the home and the land. Obviously, the upfront costs are higher than purchasing in a land lease park. However, owning a home in a resident-owned park is no different than owning a stick-built home on Main Street. The biggest advantage here is that you'll be getting a home anywhere from 1/4 to 1/2 the cost of a traditional single-family home while still enjoying the same equity benefits. Tip number four, regardless what you're purchasing, have it inspected by a certified home inspector. A 4-point inspection will typically run between $100 or $150, and if you're planning on buying insurance, your insurance company is going to require it anyway, so get it done. So the last tip that I have for you guys today concerns financing, and the biggest recommendation I can give you about financing is try to avoid it altogether. However, I understand that there's going to be some times where you might be a little short on cash and need some financing. And when I'm talking about needing some cash, for example, let's say you're looking at a $70,000 home and you only have 50 grand in the bank. So yeah, you might need to finance $15,000 in order for you to get that home that you really want. However, I am going to say this, if you're going to finance, it's going to be in your best interest to take the absolute shortest term possible. If you're age 55 or older, I would never recommend you going into a 30-year contract, guys. I'm telling you, it's a financial trap.
It's a trap.
What you should be considering is a 10, a 15, or at the absolute worst, a 20-year finance contract. And again, use the rule of 30 to determine how much you can afford to pay on that loan, and then find the shortest possible term to fit that payment. So like in our example on the lot rent, we set aside a budget of $1,200. You could use that $1,200 a month to go ahead and pay off your loan. So find the shortest possible loan to fit that $1,200. Let me tell you something about interest rates. You know, it's always the biggest thing with people when they're taking out a loan. You know, the big question is, well, what's the interest rate? Well, what's the interest rate? Well, geez, can't I get a half a point better? Blah, blah, blah. You know what? Let me tell you something about interest rates. Interest rates will determine what your payment is going to be, okay? But an adjustment in an interest rate a little bit up or a little bit down is not going to make a big difference in the payment, okay? What the killer is the term, okay? The interest rate will determine your payment, but the term is what's going to cost you all the money. So the shorter the term, the less money you're going to pay. I'll give you a quick example here. Let's say you borrowed $50,000 and you took out a 30-year term. If you're lucky enough to even pay that back, not only will you have paid the original $50,000, but you would have probably paid an additional $60,000 just in interest. So it's over twice the amount of the loan that you originally took out. Just not good for senior citizens. It's not something, it's not a trap that you want to fall into. So again, you know, look at 10-year loans and do it if you possibly can. If not, look at, you know, compare it to a 15-year loan, and then at the very worst, possibly a 20-year loan. Again, everybody, I just can't stress enough that you need to really know exactly how a loan works before you enter into any type of a contract. And this is something you can actually research yourself. I mean, it is very, very simple. I highly recommend going to a website called bankrate.com. And there you'll find they have all kinds of great calculators, including this amortization calculator that I'm using here. With this calculator, you can go ahead and enter in all your own figures, the amount that you want to finance, your interest rates, your terms, and do a side-by-side comparison, because this calculator will show you exactly what you're spending over the course of the loan. And I think you'll just be totally amazed when you see how much money a loan really costs, especially those 30-year contracts. All right, everybody, so I'm going to finish this video out by going back on topic again, talking about insurance, because a lot of you folks might be wondering, well, gee, can you even get homeowners insurance on a manufactured home? And the answer to that question is yes, okay, but here's the one thing you don't want to do. You don't want to call up your local agent at Allstate or a local agent over at Geico or any of those major companies, because a lot of those companies, they don't deal in insurance on manufactured homes, and the ones that do, when they give you a premium amount, it'll probably just blow you off your chair. Okay, so what you want to do instead is you want to call an insurance broker. An insurance broker will go ahead and collect all the information about you, all the information about the home that you're interested in, and farm that information out to many, many insurance companies. And this way the broker can actually sort through them, find the best policy, find the best price for you, and you're probably going to come out much further ahead than going with just an independent insurance company like we spoke about. Now, here's something that you need to know if you're doing any type of financing on your manufactured home, or as a matter of fact, for any home, it doesn't make a difference what it is. If you're financing, the finance company is going to dictate to you how much insurance you have to carry, and they don't care what it's going to cost, because you have to remember one thing here, guys. The insurance companies are only looking out for themselves. They don't care about you. They're only trying to protect themselves in the event that something happens. Now, a lot of people, they don't realize that if you pay cash for your manufactured home, or let's say you just bought a $750,000 home down in Boca Raton and you paid cash for that, there's absolutely no laws or regulations that require you to carry any insurance at all. So if you're purchasing a manufactured home and you're able to put some money aside for incidentals, you could do what's called self-insuring. Now, if you're not comfortable with that, okay, another advantage to paying cash is that when you're working with a broker, you can actually tailor a policy that's not so demanding as a finance company would make you do. So you could probably come up with something that you feel comfortable with at a lot lesser premium. All right, everybody, I'm going to go ahead and put this subject to rest. I hope that you guys use the tips and suggestions I gave you to determine whether or not it's still feasible for you to come down here to Florida. I mean, you know, I know I said a lot of negative things, okay, about what's going on here, but, you know, I still think the positives about living here definitely outweigh the negatives. Just like anything else in life, you know, you just learn to cope with all the changes that are happening. So do I think that manufactured home living is still one of the more affordable alternatives here in Florida? I'll tell you what, guys, it works for me. A lot of you know that Lily and I live in a land lease park, and, you know, my lot rent here is $800 a month, and, you know, there's some of you guys, you might think, well, that's really high, but, you know, compared to some of the homeowners out there, when they take into consideration just their homeowners insurance and their property taxes on a monthly basis, they're paying $650 to $750 a month just to cover those two items. So, you know, I make that $800 payment every month. I don't have any stress. I don't have any worries. I have full use of the swimming pool, the clubhouse, the golf course. I mean, all the amenities here, you know, that just make living in Florida so great. So, you know, to me, it's definitely worth it. I don't care if the lot rent goes up another $50 a month like it did this year. I'm happy to pay it because in the long run, I still think I'm further ahead. But, you know, again, guys, that's just me. I mean, you know, it might work for me. It may not work for you. Again, this is something that you need to decide for yourself. Again, I hope I didn't frustrate too many people out there. And, you know, obviously, if you guys have any questions, you know, feel free to give us a call. We're always available to answer questions either by email or by telephone. You know, don't be afraid to pick up the phone. Call us with your questions. And, hey, you know, you'll see Lily again this coming Sunday when we do our Sunday video. So, hey, guys, take care. Talk to you later. Bye-bye.